Let's talk about a deal, or rather a potential deal, between two JSE listed companies. Number one, Afrimat. Afrimat is a leading black empowered open pit mining company. I'm reading from their website, by the way, providing construction materials and industrial materials. If we go to the other one now, let's have a look at that. The other company's name is Infrasors. Infrasors is a South African mining resources company maintaining, it says here, a well-balanced portfolio of mining assets that offer sustainable growth through the exploitation of minerals via its open cast mining and beneficiation operations. They want to get together because JSE listed Afrimat yesterday increased its offer to the minorities of Infrasors from 35 cents to 65 cents. It's quite a big jump, and this is a premium to the current trading price at the time of writing of around about 60 cents. In the studio with me now is the CEO of Afrimat, and that's Andries van Heerden. 35 to 65, a big jump, but obviously we have to go back and start where the deal started. What's been the sort of courting, the wooing process between the two of you?
Lindsay, we should go back to the beginning of the year. We announced the deal, I think, about in January, maybe early February, where we acquired 51% of the business at 35 cents a share from the controlling shareholders at the time.
Yeah.
The business was, at the time, it was in trouble, and we just recently reported on the financial numbers, and it was a turnaround situation. So we went in, as from the 1st of March, we took management control.
Was it hostile?
It wasn't hostile. No, it was a friendly takeover. We bought the controlling shareholders and the previous management we bought out, and we moved in on the 1st of March, put our people in place, started turning the business around, and we started seeing some good results on the turnaround.
And the 35 cent, you obviously want 100% because it's messy if you don't have that.
Yeah.
So hence the rise from 35 cents to 65 cents. How has that gone? What's been the reaction in the short space of time since you raised it? Yeah.
When we did the 35 cents offer and we bought 51%, we triggered a mandatory offer from the from the JSE and from the FSB.
Yeah.
And so we had to make that offer. The offer ran until, officially it runs until today, 12 o'clock. And we didn't get much interest at that level because it was significantly below the levels that the share was trading at. The share was trading.
So it was a bit of a cheeky bid, in other words.
It was a cheeky bid, but that was the price at which we bought the 51% controlling stake. So we saw that we were getting a very limited reaction, or virtually no reaction at that level. And then we went back and we did our sums, and we think the 65 cents is a very fair offer. And as you rightly say, to turn a business around with a whole lot of minorities in there is just a lot more complicated. And we think our recommendation would be that minorities take this offer and rather invest in Afrimat. Take the same amount and invest in Afrimat, and you should see a much better upside and a lot less conflict.
What's the rationale for the deal? Is it economies of scale? Is it the fact that your two businesses sort of bolt onto each other quite nicely? Do you think the sector that you work in is starting to turn around, having had a pretty tough time recently? Can you tell us?
I think going back a little bit, Afrimat listed in 2006 at the height of the boom. We were at the time a pure construction materials company.
Didn't we chat actually around about the time of your listing?
Yes, we did.
Yeah.
We did, and we went through the cycles. The business came through very strongly. Our balance sheet is strong, but in about 2009, we realized that the aggregates market that we were exposed to was very volatile. We started growing the business in the industrial mineral space. We acquired a company called Glenn Douglas from Exaro. Yeah. We then bought the Clinker Group, which was a very good acquisition, and this is the third acquisition in that space. So that would be the main rationale. Infrasors specifically, we saw that the underlying assets are good. The business wasn't performing optimally, and we thought that if we introduced the way we ran our businesses, we could unlock some value, and that was why we entered this business.
What's really encouraging is that during relatively tough times in the construction business, the mining business, you've still maintained a business that has a balance sheet that is able to do something like this. How are you funding it?
Well, we have virtually no debt on the balance sheet. At the end of February this year, Afrimat had a debt-to-equity ratio of just over 4%. So we're funding it out of our own resources.
The other encouraging thing is that you're doing a deal, because a lot of people, when there is uncertainty in the markets, sort of go into their shells and don't become expansive. But of course, as Warren Buffett says, you know, you've got to be fearful when people are greedy and greedy when people are fearful. So you're being a little bit greedy in anticipation of things turning around medium and long term.
Yeah, I think that philosophy of Warren Buffett is very strongly that of Afrimat as well. When in the good old days in 2007, 2008, when other people were paying exorbitant amounts of money for buying quarries, we sat on our hands. And since the meltdown in 2009, we've done very, very nice acquisitions, and off the back of a very strong balance sheet. So that has been the growth formula of Afrimat. Yes.
What's going to be the schedule now for this deal? When do you expect it to be bedded down?
Well, this offer runs until early July. I think it's on the 7th of July that it closes. Hopefully we'll get a lot of interest in there. And as soon as we've seen the result of the offer, we'll take stock, and then we'll make the decisions after that. But the idea is to integrate it fully into Afrimat and to try and unlock the synergies without conflict of interest.
Very good. Mining and aggregates, concrete products, ready mix, industrial minerals, rather, contracting, international. Those are your divisions. You obviously, as I said before, and I'm repeating myself, but fairly optimistic about the sector you're in and the economy in general.
Yeah. I wouldn't say we're optimistic about the economy in general. We are just as fearful as everybody else. But we think it's a good time to do acquisitions when everybody else is sitting on their hands. And given that we stick to the operational basics, make sure that we remain quite strong on cash flow, keep our balance sheet under control, make sure that the costs remain under control, make sure we get the revenue that we expect, it should be okay.